Except one of them I missed my exit by about a tenth of a penny. Oh, my inaccuracies, right? I missed it by a tenth of a penny. Oh no. Let's get over here. Oh no, the cats have taken over my spot. Get out of here, cat. I am back on the webcam. How is everyone doing today? We got quite a bit going on. I'm gonna have to adjust the zoom in on my face some other time. I think it's maybe a little too zoomed in, but live with it this stream. We got a couple of things going on. NATO is bringing more arms for Ukraine. People at the NATO summit are talking about doing that. There's also an advancement to the plans for Sweden's membership into NATO. Some big news for this morning. Citibank upgrades their position for U.S. equities from neutral to overweight. I was just listening to some commentary over the weekend, and there was about a handful, 3 or 4 analysts. And those analysts said, hey, once we start to not anticipate there's a recession, maybe that's when a recession will happen. It just has to be unpredictable. And, I'm still in that camp of my recession jinx theme. But man, was that wrong timing. I did that like a month and a half ago. And the recession jinx idea hasn't played out yet. Simple as that. The whole idea of a recession jinx is that once a decent number of participants in the market least expects a recession, that there'll be some surprise in the data, and we'll get some surprise that flips their decision making. So that's the whole idea behind a recession jinx, and there's still other analysts in the world who share the same views. So let me go ahead and double check that everything is peachy. There we go. Do. How you guys like that intro song? Do. Let's see, what else we got here? Yellen went to Beijing, did a couple of handshakes, and has said that the U.S. is now on, the relationship between Beijing, China, and the U.S. is on surer footing. Hey, check this out. I did read something about oil. I heard that Russia pumped a bit more oil, so that's probably caused this decline. But look at where our low ended up, right? See how we got our big old distribution here? Hey, check that out. This is the peak in your distribution, and that is the low for the day. And that's also how I did my other 2 trades today. I just use this for day trading on the day, in and out, and around my larger swing positions. Also, I did a trading assessment, and I created a trading assessment in Google Forms. Let me see real quick. I went ahead and I made some trading assessment form based off here for some very baseline risk management measures. I only got about 3 responses. But as I do these trade assessments more and more and actually start to collect some data over the weeks and get more participants, the data will become more useful because, when you only got 3 people responding, it's just like, oh, okay, what are the opinions of those 3 people? And also by having a survey over time where I'm also tracking the responses of each participant, I can check, oh, which participant has especially good responses. And then I hope that after some period of time, I have a few hundred responses every week. I can then take the people who have the highest degree of accuracy over, week after week after week, and put them into their own little separate elite bucket. And then do a comparison between the net overall expectations for the trading week ahead and then what the trading expectations are for the elite traders. And then do a comparison and see how far they deviate. That'd be an interesting little study, you know? That'd be an interesting little study. And I hope to get more people involved. If you'd like to be involved in that trade assessment survey, go ahead, hit me up on Discord. And the next time there's every Friday, I send out the link. And then the survey ends on the weekly open on Sunday. So there's about 2 days, roughly 2 days of time to answer the survey. As far as S&P is, it just reversed its trading day from yesterday. It hasn't moved all too much. Man, this thing looks like it'll end bullish. But we got to be careful. Careful. Having those expectations going into the month ahead. Earnings are going to play a big role. Also, I'm starting to hear some analysts talk about how they anticipate the Fed to do more than 2 hikes this year because they're not seeing as fast of a decline in economic indicators. Now, I think that we've kind of gone over this whole idea already. To be quite fair, the Fed is okay with the rate of decline, that it's gradual. It means that they can keep their current rates higher for longer. It's just they'll have 2 more hikes, that's the expectation. And then they'll hold it there for, everyone is anticipating that they're probably not going to cut until at least the end of 2024. And most people, for most central banks, are anticipating that every central bank will have an official hold on their policy sometime by the first quarter or the fourth quarter of 23. So the first quarter of 2024, the third or the fourth quarter of 2023. Okay. Dollar had a bit of a rally, a pullback, and it's kind of not doing all too much. Your top could be in for the day. I don't think your low is, though. And Bitcoin is having a bit of relief from the pullback yesterday. You would need to see us at least close above the 30.2K to see a more bullish expression on the day. Let's go ahead and check out those 2 trades I was talking about. And by the way, now's a good time where if you want me to review some charts for your own viewing pleasure with my indicators and my analysis, now's a good time to send a message into text chat. Also, just say hello. Like, I see you there, Ricardo, dropping some money bags in the chat with me. Okay, doke. Let's go to the first trade. So this is the trade I actually technically missed by the micro pip that I was so upset about. So you see how we have our distribution. It looks like this for our tops I went ahead and I found the peak in this distribution. And I put my take profit for a long trade right here. And I just barely missed it by a single micro pip. By a tenth of a pip, I missed my exit. If I had just set it just a bit lower, I think that's what, 30 pips on the day? Something around here. Yeah, 25. I think I had my entry a bit lower. Call it somewhere between 25 and 30 because I had the entry lagging from over here. So, yeah. Hey, James. Nice to see you in the chat. Also, probably nice to see my face finally on the face cam. Finally got the camera set up again after 4th of July. Took me a moment there. Oh man, yeah, the live stream's like really popping all of a sudden. Everyone's hopping in. Hey guys, Joe's live. Joe's live. So yeah, missed that by a micro pip. That's a bit upsetting. Net trade still in profit, but I'm just gonna put that stop loss, 2 or 3 pips in profit. If it gets hit, it gets hit because there's still a pretty decent likelihood that you, I don't know, even come down to this 123.60 range. This is still in the cards. So, put the stop loss, 2-3 pips in profit. Sucks that I missed it. But I wasn't even awake at this time. I was fast asleep at this time. But I did the exact same thing on Euro Dollar. I took a short trade here just for a day trade. And I think I need to load a 2 hour because that 1 hour isn't loading quite right. Yep, there you go. You can see it. So you got your peak here and a second peak like that. And also, if I hide this, it becomes a little clearer to see, right? So I had a take profit from a short up here. So that's circles where I went short. And I had a take profit right here. And so when we traded, I got I got exactly wicked out. These things are pretty darn accurate. Jesus, man. Like, now I see why, all these PhD guys who trade and make stochastic systems for assets, like, why they've all been switching over to this specific type of distribution. Because, man, it has done a very, very good job at modeling the daily returns of prices of every asset. It's a great generalized model. And guess who else likes to use this particular distribution? This guy. Yeah, from the crazy risk management book I've been reading. Yeah, that book's been awesome to read. Let's see here. We got a couple requests. Euro New Zealand from good old James. Nice to see you, James. Let's check it out on the day. We got a bullish continuation, it looks like. Cracking above that prior swing high from the day before. Ooh, yeah. And you broke past that R1. Yeah, check this out. Once you went past this R1, you're kind of dealing with effectively no man's land. This whole range here that I just highlighted, see how the colors in this distribution get a bit darker than over here? How this is a much brighter red. And then once it goes here, it's a much darker red. So this is kind of your intermediate zone between where most of your tops for a given day occur and your tail risks. And you can just look at these odds and see like, oh yeah, those those are tail risks, right? This is where you get your low probability, you know, crazy surprise economic event returns. And then they tail all the way off to pretty much infinity. Oh, look at that. There's even just this little bump in the distribution. This thing simulates itself like 3 or 5,000 times every single time the chart does a price update. So it generates a whole new distribution based off of 3 to 5,000 random samples of the distribution. And looking at this, I mean, what I see is slight bimodality. I mean, you can argue that there's 3 modalities here. And by modality just means humps or peaks, right? So there's a peak right here, a peak right here, and a tiny little peak right here at the edge. You typically don't really see that, right? Like, look at this data for the downside. It's pretty clear it does something like this, right? Where there's a single peak. So that's what you call unimodal. And maybe you could argue that there's a second peak right there. It's just, you can look at it and see, hey, the probability that's causing this thing to give a little extra jump is only like 0.2%. Whereas the jump over here, you can clearly see it's like more like an extra 0.5%, a full extra percent. So there's something here. There's something here. You can meaningfully see like, hey, the probability actually goes from high to really low to then like 1 or 2% higher over here. So if I were to say if the top was going to come in anywhere today on this particular chart, looking at all this information, I'd say, I mean, there's a not so insignificant probability that you're topping out like right now. I mean, we could do something along these lines. You could go short, and this is just for the day, right? So take this down to a likely close for the end of the day. So if this is the top and you're worried about tail risk events, you put your stop loss just past where these tail risks begin to realize themselves, right? So if all your tail risks start around here once this thing cuts off, that's where you put in your stop. So now the question is, where the hell do you get out? Ooh, that looks pretty damn uniform. Frankly, it's a guess. I don't think that there's a super clear plan for where exactly to get out here. But if you think this is overextended, and if you're doing a counter trend, let's see here, yeah, counter trend bearish setup with the pivot points, this would be your baseline expectation where you take this, you shorting in here. Oh, look at that. It's this distribution saves you on about call that an extra 20, 25 pips depending on where you put your stop. Yeah, the probability distribution makes your stop losses more efficient relative to pivot points. But yeah, this is the baseline expectation that you would have. Now, this is not an actual trade that I'm taking. Pound dollar. That's a good one. Let's check that out. I'm just looking at my trades over here on the right. I'm like, hey, money. Oh, wow. That looks cool. Big rise up, big fall down. This sort of move is what COVID looked like. This is what happened during COVID. You had this huge, I mean, when I look at like Eurodollar or dollar CAD, it looks like this. Big spike up, fall down for a couple of months, and then this is 2021 and 2022. This is like a microstructure of COVID. Yeah, isn't that kind of interesting? This does look like a microstructure for COVID. That is crazy. The brain sees very interesting patterns, And those are some very interesting patterns my brain just saw. It's only helped identifying patterns has literally only helped me out like once before. Oh, and I mean, speaking of, let's go ahead and go to a 1 hour because I think it's not starting at the exact right spot it needs to be starting at. Uh-oh. Calculation timed out on the pivots. Calculation timed out on the probabilities. What's going on with this chart? Oh, man. Yeah, so now that we got it starting at the right spot, the downside risk, we're pretty much right at the edge of the distribution, right? So you got one peak here, one peak there, and then here's all your tail stuff. And literally right now your tail risk is right here. It starts right here. So either this thing's got to bottom out like right now, or you're in falling knife mode effectively on pound dollar. At least for the day. Technically you could be in falling knife territory right now in all seriousness. I would say based off what I'm looking at, you've technically crossed the threshold for where falling knife is. Even if you did rebound for like 1 or 2 hours here, there's still no guarantee that that's going to be the bottom right here, right now. But man, wouldn't that be one killer trade, right? Buying here and taking it back up to here where most of your closes are for the day, right? This is a distribution of where you typically close for the day. So you don't close down here all too often, but man, this is tail risk scenario. This is falling knife scenario. Even going short into this is not smart. So unless you're already short, so long the momentum keeps holding strong, I don't see. Yeah, based off the trading rules for M oscillator, this is just a hold, a sell trade. But this is definitely not like you hop in and you start buying this up. No, yeah, this is literally the threshold for where you start experiencing tail risks. Sure, you could go ahead and say, guys, this is just only S1, right? This is just S1. Well, just because it's S1 doesn't mean anything, right? You have to put a bias onto the pivot points for your trading expectations. That's how pivot points typically work. You need to bias the pivots. That's when, you go to the settings and, a lot of guys who are looking at buying pound dollar are probably looking at it like this as a range bullish trade setup where you got your stop loss at this S1.5. You're buying here in this green zone, so you probably bought here at S0.5. You probably bought here at S1. And you're going to have your stop, conservatively 38 pips away. And maximally from the earliest, most conservative entry, like 61 pips away. But at least here, it's like, yeah, here's your second bump in your distribution for where your lows can occur for the day. This seems like a reasonable spot to catch some entries. But once you start going past here, right? You can just see what price is doing right now. It's not really stopping. Having your stop all the way down here doesn't make too much sense when you actually have a distribution to look at, and you can say, oh, once we start crossing below this S1 pivot, the probability that I actually am buying a low for the day becomes extraordinarily small. It's like 1% or less than 1%. This is like buying a raffle ticket, and 1 out of 100 times or 1 out of 200 or 300 times you're right. And this is why this is the literal mechanic of why people get cut when buying falling knives. because it's like trying to buy a lotto ticket. And this is literally a visualization of the mechanic of why buying falling knives is not the smartest thing in the world to do, because your probability of actually buying the low is incredibly small. So it's just not a smart thing to do statistically, right? It's not a smart thing to do statistically. Yeah, yeah. Um, Thanks, James, for all the recommendations, making sure I go through everything. Because, as soon as I stop seeing people hang out in the chat or whatnot, I'm like talking about other things. But hopefully, you guys are getting some good, useful stuff out of the strategy discussion that I'm talking about here. And, you can buy these indicators. I mean, you buy this, and it comes with like five other indicators on top of it. Oh my god, yeah. I want to do gold for you, James. Let's go to good all. Whoa, whoa. Did some news come out that I wasn't paying attention to? Did some news come out? Canada building permits. So what? It did okay. Month over month. Oh, well. Prior number was negative 18%. Current number is 15%. That's good. Canada's wildfires really aren't doing too well for it. Oh, look, it looks like we got the exact same setup here on gold. I mean, either the whole idea was to buy around here or to buy around here, right? One hump, two hump. And so now the question is, well, if you're anticipating the low to actually occur somewhere around this second hump here, this seems like a reasonable stop before you start dealing with very small probability tail risks for the day. So it's just a matter of, well, from here to here, it's about a $5 move. Do you really want to have a $5 stop on gold? Do you want to maybe wait a couple of hours to see the news of why this thing is moving? Hey, nice to see you in the chat, Will. Uh, man, I am kind of lost on what's been driving assets today. Because it looked like as we were going into. Yeah, it's like as we've been going into today's trading, that everyone was so risk on and everyone was so bullish. And, I took some slight day trades that were long the dollar, technically risk off. But those were literal day trades for 20 to 30 pips to help me manage the risk on my euro dollar short position that I've been holding now for like the last month, collecting a neat positive swap. Man, that thing has been paying me well every single day. It's not the best swap out there, right? I was actually reading Brent Donnelly's article, and he pointed out um, Mexican MXN JPY as a freaking fantastic swap, because the Bank of Mexico has like over 5% cash rate, and Japan has been effectively at zero. So just buying Mexican peso yen has been a great swap play, positive swap buying this. And then the appreciation has just been absolutely phenomenal this year. Just look at that, 55%. The currency has done so well. Alrighty. That's just a little bit of an aside. Hey guys, I read articles from smart people. Oh man, check that out. It's just falling, falling, falling. Yeah, like I said, you might want to wait for some time behind this because every other chart we look at has kind of this falling knife look where they've already gone past this little spot right here that I'm pointing out where most of your tail risks start to become realized. A lot of charts are just yeah, shit, a lot of charts are just racing for new lows right now. That is yeah, that is kind of crazy. Yeah, Eurodollar's made a new low on the day. Um, the question is, will it actually go lower though? I don't know. I mean, now that I see some sort of reaction here, my neurons activate, and I go, there is legitimate, risk to reward here to the upside. So, for argument's sake, right here, right now at the current price, stop right there. Theoretically, where could you take this to the end of day? Roughly around here. It's effectively a 1-to-1, depending on where you get in. Not the best setup in the world. Like, look, when the volatility ramps up like this, and you start trying to do trades like this, um, you gotta significantly mitigate the size of the trade. You can't be trading like 1% of your account on trades like this. This is like, again, the thing that I like to do is instead of putting on 1% of your account on each trade, I like to break it up into three parts, into basis points, right? Out of 100, 1% is 100 basis points. I like to break it up into 20, 30, 50. So 20 basis points for the first entry, 30 basis points for the second entry, and 50 basis points for the final conviction entry, and spread that out over time. And today, this sort of thing, this would be a 20 basis point setup. Because effectively, what you're trying to trade here is mostly the volatility, right? Either this thing is going to continue its volatile snap down and stop out, which is another reason to size down, right? Or this thing is going to have a big old snap up and, it could go up, you know, back to the open of the day. The thing could close green. You could be up from this low, you know, 10 points, 20 points from this low here. But there's no precise way of knowing exactly that's absolutely going to happen. So you take some measured risk, you have some modest conservative expectation, and you price in the volatility to your size and you make it volatility adjusted. You volatility adjust your trading. And then that way just kind of smooth things out so then when you take shots at, you know, crazy moves like this, you're not burning yourself when effectively you want to do a bit of gambling because that's effectively what this is, right? You don't know for sure. You're looking at the probabilities. You're like, this is a pretty decent bet, but the volatility is so damn high. It's giving me a lot more uncertainty as to what's actually going to happen here. I'm still not seeing anything come down the squawk, guys. I'm still not seeing anything come down the squawk. Like, absolutely no news is happening on my front. Yet, dollar, everything is going risk on. Right. Bitcoin took a hit just in the last hour. The SPY just took a hit in the last hour. DXY. DXY is up and away. It's recovering this huge ass, fall from this day here on ADP. I still, while I understand the not just the ADP but the NFP, all the US employment data not just was lower than forecast, but also the prior data got revised down. On an absolute level, the US is still fucking killing it. Like it yeah, don't get me wrong, it was a decent surprise, but the absolute number was still big as hell. And I mean, the revisions just keep getting bigger. I was just listening to some commentary uh, from what's his name, the guy who runs EPB Macro. I have a subscription. I subscribed to him, uh, Eric, at EPB Macro, and oh yeah, Eric Basmajian, right? He has some excellent, excellent commentary, and I found him when he was relatively new on YouTube before he's blown up and had all these great, great, colorful animated videos. I just love them. But I found him when he was still relatively new, and I was able to like subscribe to his premium gold plan for like $1 a month. And Lord, I hope I get to keep that subscription. I've been told though I only probably am going to be able to keep it till the end of this year, and then I got to resubscribe for like I hate that. Oh man, I was an early subscriber, and now you put a timer on my subscription where I gotta 100x my subscription. It's only fair. It's only fair. This commentary's been definitely insightful. I'd say, you know, of the people who I subscribe to for proprietary research, Bassmagian is definitely one of the top analysts and most consistent in their analysis. I definitely, definitely recommend like subscribing to Bassmagian. But most of you guys probably already are. Bassmagian is like 100 times bigger than my channel. But man, good stuff. He posts good, good stuff. I mean, one of the things that I focus on is helping people find good research and good analysts to listen to. So then you're not just listening to me, but then again, you're not just like listening to crapola, right? You want to listen to guys who have good methodologies, who've actually kind of tested what they're doing. All that sort of good stuff. Yeah, things are still moving pretty risk off here. The only thing that's really holding up so well is oil. Yeah, gold just got hammered. It had such a good day yesterday after getting hammered here. And now I don't know. It it's still not looking terribly great. But, there's the risky trades. As far as let's check out dollar. Dollar probably has a bit more up. Yeah, dollar has a bit more upside probably. It could go up. I could see dollar going up anywhere between 0.02 to zero point 0.1. Another one. So I could easily see dollar going into the 102.6 range from here, because that's the next most likely area it goes into where you're likely to see a high for the day. So I don't think we're quite done on any sort of drawdowns on the day. I think we're gonna have to wait till after the New York lunch session. We're gonna have to wait maybe till after 11 or 12 New York, when everyone goes to lunch. And then in the last 3 hours of the US market, we're gonna have to come back and check up on this. And I'll be up during that time. I'll be in the Plan to Profit Discord. I'll be in the trading room like an hour or two before the new daily open, at least in the FX markets. And if you want to get into that Discord, hang out with me as we trade that point in time, because that's probably when the next bout of volatility is going to hop on in. You can join the Plan to Profit Discord. Links in the description. It's literally the first link. And if you want access to these indicators, and then I have like, again, 5 more. I got a WAP store, and also it comes with a trading group and access to one-on-ones. Yeah, good stuff. And we've been posting a lot of group plans recently. We got like 4 or 5 active group plans right now from guys who've been hanging out in the trading group and myself. Some good work going on there. Real quick, I was rating some research from MUFG. They had a particularly cool outlook on FX. Yeah. Going through where is it? That's FX Weekly, and this is FX. That's a more technical FX Reserve thing. Here we go. I'm kind of jumping all over the place here, but real quick, just to bring some attention to the good old Japan. Set this to unbiased, unhide that. I thought this was particularly good. So MUFG is, the M stands for Mitsubishi. Most of the analysis from MUFG is written by Japanese analysts. So very, very frequently they'll have commentary on Japan and on the BOJ. And I find that their commentary is some of the most consistent on the BOJ. So whenever someone's like, hey, Joe, I'm trying to figure out what analysts are saying about the BOJ and the yen, there's all these banks and all these outlooks that post free outlooks. They don't require any account or anything. But, which one do I read? Because some of these outlooks are 20, 30 pages, and I don't want to read like 10 of these things just to get a little bit of information on the BOJ. And so, like the librarian I am, I just kind of snap my fingers and I say, go to the MUFG outlook. Because I've been reading these outlooks now for 3 years. I know who says what and generally who has the best commentary on what. So if you're new to the stream and you start reading these outlooks alongside with me, there's an outlooks channel in the Plan to Profit Discord. And I'm not, downloading the PDFs and uploading them to the Discord. I'm just going to their websites and getting the link to the PDFs that's publicly available on their websites and sharing that link. So that, it's not like I'm going into their proprietary backend and downloading all their data and distributing it. It's like I'm just sharing a link to their website. It's all front facing stuff. So yeah. Let's see here. Changing yield curve control. What MUFG has to say here on the Bank of Japan and yield curve control is this: changing yield curve control at its own choosing is a far better scenario for the credibility of the BOJ than changing due to intensifying speculation, with 10-year JGB yields constantly pressuring the sustainability of their yield curve control policy. In the sense A July change is perfect timing given the limited speculation, underlined by the 10-year JGB yield trading at 0.42% today. So, real quick, I thought that was probably on the more important side to bring up because some people are like, why the hell is Japan getting so strong? And all you got to do is look at these 10-year yields from JGBs over the last 3 trading days and see how they've rocketed. And then you go to dollar yen and you're like, oh my God, this is just totally crashed. I was listening to Mark Mildrum, and he actually had traded CAD yen. He was short up here. Guy did super well, made like 200, close to 200 pips at least on his trade. And man, that was a good trade. But one of the things he said is, I'm anticipating this to be the low. I don't think Japan's going to be doing anything well. According to one of the largest banks out of Japan, and one of the banks that gives some of the best free and most detailed analysis out there on outlooks for the Bank of Japan, they say, hey, you know what? If the Bank of Japan truly wants to stick to their original messaging of we're going to do our rate hike, or effectively our tightening of monetary policy sometime when the market least expects it, I don't see why not. Why not in July? That's the problem with with doing analysis on the BOJ. The expectations right now, the consensus expectations, is that the BOJ is going to maintain its policy where it is right now for the rest of the rest of the year, guys. Rest of the damn year. They're not expected to change jack. Nothing at all. So when MUFG says, Bank of Japan could, play it sneaky and just hike here in July, it starts getting ants in people's pants when the analysts start saying, oh, there actually is still a legitimate risk, a legitimate and significant probability that the BOJ actually notices our consensus expectations for a weaker yen and just takes advantage of us based off where we're priced right now to tighten their monetary policy and get the yen on a path to strengthening. And then the Bank of Japan, at that point, is able to get the Ministry of Finance off their back and all the politicians off their back, as Lord knows they don't like dollar yen specifically being at such high levels. I mean, the last thing they want is like the thing already went and tapped 145, and there's some lucky son of a gun right now who shorted exactly at 145 and is right now sitting real pretty 260 pips up. But now that lucky son of a gun needs to probably hold on, because going into the BOJ meeting, the probability, the analysis from analysts who are experts at the BOJ are saying, there's still significant risks that the BOJ tightens their monetary policy. That's that fear of that occurring has been what's been causing, like, over the last 3 or 4 days, this reversal, this strengthening in the yen. And when did that outlook get released? This outlook got released on the 7th, so right around here is when that outlook actually got released. A lot of analysis was saying, hey, Bank of Japan might actually hike. A lot of banks in Japan started to change their expectation, and then as soon as they released those outlooks, it went ahead and put the kibosh on the yen, and it just fell. Yep. Yep, yep, yep. So let's see here. Is there anything else that I should check out? Uh, Aussie dollar totally reversed its move. It's officially kind of in this range between 0.66 and 0.67. It's just in this range. I was able to get a nice play shorting it around here, exiting it around here. But man, do I wish I shorted it again. Let's go ahead and check out the low odds real quick. Yep, check that out. Once you crossed this little section right here, we started experiencing some tail risk. An extra 20 pips of just falling knife. Yep, yep, yep. Let's see, what else is there? Again, pound dollar. Huge, huge, huge weakness. I don't know. Is there really anything else I need to be aware of that I need to talk about? I don't really see any. I mean, listen, outside of the Fed speeches that are coming out later today, and there's about half a dozen of those, really isn't much else to talk about. And, well, we got to wait like an hour until the first speech happens, 2 hours till the last one occurs. So it's just like, I think it's a good place to end the stream. I'm going to be hanging out in the Plan to Profit Discord. I'm going to be hanging out in the trading room, waiting on these speeches to come out and on the reaction in markets for those speeches. So if you want to hang out with me for the rest of the day as trades go along, ask me questions, check out what trades we're doing. Hop into the trading room, the Plan to Profit Discord. Other than that, I think I'll see you guys in a bit tomorrow for the New York session. It was another good day of trading today. Another good day of trading. And hopefully you guys learned a thing or two. Alrighty. Thank you guys for watching.